glad you're joining us today. And for those of you that are joining in virtually, I hope you find value in finding your business zen through our conversation today. And we've got a few things to cover, but before we get started, talking about that zen, I want to really set the intention that one, having business zen in your business is possible. And two, it all starts with our intention. And we at RTB Capital Group, RTB stands for raise the bar, and bar stands for belief plus actions equals results. So what we believe usually leads to the actions we'll take and the results we will get. So I want to just bring all that together. When it comes to business zen, you are in control, and what you believe will lead to those actions that will let you have those results. Now, what I want to kind of open the door to is maybe any beliefs that you have around budgets, around cash flow, or even around these different concepts and finding how is a business healthy, that we let go of the beliefs that we have if it's not serving us. And that we are open to maybe having a few different beliefs, or at least taking another perspective to the beliefs we have regarding our business and regarding the things we're going to talk about. So I want to start here. And I wish this was my closet. It's not. But isn't it beautiful? When we think about budgeting, I want you to think about organization, everything in line. You know where everything's at. You know when things are coming through, when things are coming out. You have a real tight grasp on it, and that it actually all is cohesive and works together. So for budgeting, we're going to be talking about a few different things, but I want you in the back of your mind to think of this organizational closet and how you can create this in your business, and how you can turn budgeting from budgeting to budgeting with purpose. It's a total different feel, right? I can budget and just tick the numbers off and do it every month because I need to do it, or I can do it with a purpose that is really going to help me grow my business. So the question to you is, do you currently have a budget? And if you don't, there's no judgment here. You just may not be budgeting, and you may not be tracking it, and you may not even have a type of budget. That's okay. That's why you're here watching this. And if you do have it, great. What kind is it? What type of budget is it? Is it budget based on goals? Is it budget on reducing costs? What is your budget? What is the purpose of it? And are you tracking it? And if you're tracking it, are you tracking it monthly? Are you tracking it weekly? Are you tracking it quarterly? Are we just taking a peek at it annually? So I want you to really just kind of sit in on business zen, right? When I budget, I want you to budget with a purpose. And here are some tools that you can use. So most of the time we get asked when it comes to this is, well, what should I budget? What should I have in there? The standard expenses based on IRS terms fall into these categories, and I've added a few more. For those that are in service-based industries, usually you have networking and dues. That's usually not standard on there. You may have contractors that are helping you with different parts of your business. If you're a small business, not everybody may be in-house. So you've got some different things. I like to pull the accounting out of the professional services, and you may even in subscriptions pull out your web costs or different things. And advertising may be advertising, and you may even have a marketing. It's really up to you. It's what do you want to see every month, and what are you willing to kind of put into categories so you can really see the overall picture and also see the details. Now, I've added an expense sheet. You can go ahead and download from this QR code. And from there, you'll be able to actually, kind of change it up. Just remember that if you change any of the ones I have in there, add or delete or add new ones, it will change the sum category. So just remember, this is Excel. So when you download it from Google, you will be able to edit it, but just keep in mind that you want to keep those cells so it adds up properly. And then there's a really cool tool at the bottom of this Excel sheet that shows you where you can put in like, well, what do I make a month? What are my expenses? What is my profit pre-tax? Based on those numbers, am I positive, negative? And if I were to save money every month for my taxes, because usually budget, we get hit with these bigger expenses a couple times a year, and it really throws our budget out of whack. Our cash flow could be like impacted. So what I want you to think about is, how can I put a little bit away every month based on what I'm making for taxes, so I don't have to worry about it at the end of my filing, if I'm filing on time or if I'm filing plus extension, that you're comfortable because you've got money set aside for it. So hopefully that is a helpful tip for you. And as we walk into this purposeful budgeting, I want you to think about your top 3 goals in your business. You have set goals for your business, but what are those top 3 goals? And do you need the expense? If you go through all your expenses, do I need this expense to achieve my goals? Right? If I'm looking at my goals and my goals are growth, my goals are, adding new team members, my goals are these different things, then maybe I need the expenses I have. Or maybe what is my purpose behind the expense? Maybe I'm paying for something that essentially I don't need for my goal, but it is important to me that I have it, right? It's something that maybe it's a embeddable thing on your website that it looks nice. It serves a purpose. It may not be for growth or may not be for your goal, but you don't want to lose it because it's helping you, right? Or maybe it's a designation, or maybe it's something that's related to an association. You may not do anything with that association, but just having that on your website or having that as part of your business, it just helps, right? So I want you to go through each one of those and say, what is my return? So if you look at all your expenses and you're looking at the things you're paying for, what am I getting in return? And again, if I just want to have it because that's my purpose is I want to have it, then you honor that, right? But if it's something you don't need and it's not helping your goals and it's not helping you serve a return, then maybe it's something we could let go of, or maybe we could combine a few things together, meaning maybe I get one platform that has website design, hosting, email marketing, and I just combine everything into one and I save exuberant amounts of money because I had 10 different things that one platform could do for a much smaller price. So these are just tips. And again, like I said, saving for taxes will help you in your budget overall if you're taking it little steps at a time, month by month. Okay, now tracking budgets. How and where to track budgets. If you are using QuickBooks, QuickBooks is a great way because you can actually just take all the chart of accounts that you have, everything that you're spending, and you're already filing away, or your bookkeeper's doing this already, and then just go in and say, well, for each of these categories, this is my budget. And am I hitting it, or am I over? Am I under? Am I right on target? It's a great tool. You can run them by category in terms of like time frame. Like I can run it for a month, I can run it for 3 months, I can run it for the year, and really see everything in one picture. This is a great tool. For those of you that maybe don't have QuickBooks and maybe don't have a platform like that, but you would like to have something on your phone and something you can see in real time, you can set up a quick and simplify. It doesn't cost very much. And you can run all your accounts, business and personal, through this tracking system. And I'll show you why I like it in just a minute. It's another tool that you can use that can be very powerful, and also Excel sheets. Almost everybody's got Excel platform. If you're not using it on your desktop, Google Drive has an Excel platform. So you have tools you can use to track. Okay. So the first one, I just wanted to show you what these things look like. So as I said, right, you'll have your income. This one, you don't see anything here, so we don't have any client information being shared, but you see the expenses starting to go down here. And what's the budget? What was actual versus what was budgeted? And you'll see that this one isn't filled out, but you can fill these out. You can, book a time with me. We can work on filling your budget out if you want to do that. But what I want you to see here is that you can actually run this. This one's October to March, and you can pick the time frame to see, well, was I on budget? Was I not? And you're able to just be able to do it automated instead of having to go in and every month go and key in all the stuff. You can just have it done for you if you're just filing everything away, or your bookkeeper's filing everything away into the chart of accounts that it goes into. I told you about the Quicken platform. Here's a little peek at it, which I love this because here it shows you what's my year-to-date expenses, what's my 6-month, what is this month, how much have I spent so far, what is my target, what's my budget, am I over or am I under? And you can see this from your phone. You can set this up very easily. You can see it says add new watch list. You can look at your expenses and put different things in. Obviously, this one was set up for a personal setting, and it's just to get a glimpse. Okay. And then the last one, which is I have this download, right? I just gave you this download, but you have this download. You can go ahead and take a peek at this. This is basically everything based on the IRS, but this is QuickBooks. I actually downloaded this from QuickBooks, right? It has all the different months. We built this out so you'd have the full year so you can use this. I will say that just keep in mind that if you change any of these out, it will change this number. So if you delete some of these, it will change the sum. You'll just have to do the calculation or run that auto sum. If you know Excel, do the auto sum so that number is correct. So it's actually adding up when you plug in the numbers each month. Just put in there just for placeholders. You get to put whatever is happening in your business. Now, when we think about our budget and we think about cash flow and these different things, one thing, I love a beautiful beach and walking on beautiful sand. Couldn't have found a better picture, right? It's just beautiful. But cash flow is kind of like waves on the beach, meaning, as the waves come in, that's cash flow coming in and the waves go out. That's like cash going out. Sometimes you get a really big wave, and hopefully you guys are getting really big waves. And sometimes the tide comes in and pulls everything out. And it's like, whoa, where are the waves? So think about your cash flow kind of like this. It is, and to keep us on the same page, it is the movement of money both in and out of my business. And there are three main categories. There's the operating activities. What am I coming in? What am I spending going out? But there's also a couple others, which we won't focus on these today, but it's just kind of good to know. And you can do some research, but investing activities, if I'm purchasing things, if I'm selling things that are, or I'm even investing in another company, I may have different things on my investment side that could be impacting my cash flow. It could look like I have more when maybe my actual cash flow, what I'm coming in and out is different because of these, right? My financing, if I get a loan or an investment, right, and I'm paying that off, now I've got a debt that I'm paying, that would be under financing. So just keep these two and these two extra ones in mind. Most of your world will probably evolve around that operating activities. But as you grow and as you start to invest and maybe you get some financing, these will come into play into your cash flow. And how much debt do I have on the books? How much am I waiting for others, right? If I've got investment activities, and how does that impact my cash flow? So my questions to you are, how do you currently review your cash flow? What tools are you using? And if you're not using a tool, why? And would you be open to it if I shared one with you today? And what patterns, for those of you that are watching your cash flow and reviewing it, what patterns have you seen? Are there certain times of the year that are high peak and low peak? And how are you planning for those lower peak times? And how can you plan better? Maybe it's having a little bit more cash on hand because you know your expenses are a certain amount every month. You know it's your peak time that you're going to make this month, and you're going to put that money away, not use it for anything else because you know you need to sustain for the next 3 months. These are things you can do by planning ahead because you're watching it. If not, it's kind of like you're just taking everything as it comes and you're just trying to solve the problems as they go instead of planning ahead and saying, if I did this, this, and this, I'm going to have Zen in my cash flow and in my business. How nice would that be, right? So planning ahead may take a little bit extra time if you're like, well, I'm not sure how. Great, book a time. Maybe, myself or somebody else, your accountant, somebody that can work with you on these things so you don't have to worry about it and you can find Zen in your business. Now, one tool that you may have if you're using QuickBooks is this cash flow tool. So cool. If you don't have this or you don't see it, your subscription level may be a different option, and you may just want to update your subscription to a higher one if it's not there. Why? Because it could be beneficial for you. But of course, you have to evaluate, is this beneficial for me? And am I going to really use it? I think that's really the most key is, am I going to use it? If you're not going to use it, don't worry about it. If you are going to use it or you would like to see it, it might be worth the extra few dollars a month to be able to look at what's coming in and out. And as you can see here, you can see that the green is money coming in and the blue is going out. And you can see how each month is either, a little off or level or even higher. And wouldn't it be nice to be able to kind of look at that cash flow and how you could plan forward? And as you see here, if you actually click on the planner, you'll see what has happened in the past and then what is coming and how you could actually plan forward based on things you wanted to purchase. Maybe purchasing what you thought in October would not be a good time because right now we see in the cash flow it dipped down. You may want to wait till later in the year or do it while the cash flow is high and then plan. Or you may even say, well, I have a few more clients coming in October and this doesn't see it. you could always go to the next portion down from that planner and plug those things in. And it doesn't matter to your books. This is just a planning tool. So you're able to kind of play with it and see, well, if I took on 2 more clients, then I could easily take care of that expense. Okay. Now, if you're like, well, I don't use QuickBooks, that looks really cool. Not there yet. But you want a way to track it either by month or by a period, then you can download this Excel sheet. You'll have the same tools. Just remember, if you delete any of these things off, it's going to change the cells, so you're not able to get the actual numbers that will calculate for you automatically when you plug them in. And just remember, you need to put how much cash you have on hand in the bank. What are the sales? What are you collecting? What are all the expenses? And you'll go through each one of these. And then at the end, it will show you like, well, how much do I have? What's kind of that, what's left over? And then you can compare it to another period. Your income statement and your balance sheet will be a great tools to use to fill this out if you want to know what flows to what. Okay. Now, some of you might be watching this because you wanted to see, how can I increase my cash flow? Now, these are very standard, and there's definitely, you could, have a new service, increase the price of your service, open a membership, find a way to have everything be, subscription based, right? There's so many different tools, and I'm giving you a few here today just to kind of get you thinking about it, right? Create a formal collection policy. And if you don't have follow-ups, make sure you're following up 30, 60, 90 days so you don't miss those opportunities. Because sometimes it's not that you didn't send it out, it's just you didn't follow up and they forgot it, they saw it, and they need to do it. So just having a policy that this is, one, if you can automate it, or two, that you have reminders to not forget. The other thing is clients pay, if you can get clients to pay a deposit, have it cover all your expenses. And then have it tiered out. Maybe they pay you every 3 months or every month, right? Sometimes even offering that discount is going to be super beneficial because you might be able to get a few more clients in this month and they may pay for the whole year. But if you have not as many clients paying for the full year and you have that issue of, well, I got all my clients in January and I don't have any till June or December, then you have to plan how much of that money do I need every month? Put that away so you can cover your expenses every single month. Make sure you're sticking to your budget so things in the cash flow space don't go off the rails. And then if you have product automate the invoicing. If you have product, don't get too much tied up, if you can, in the inventory. If you're able to, keep it as lean as possible, what you need, put some tools in so you're ordering on time, so you have enough so you don't lose business because you don't have it in stock, but you're also not over filling the inventory stockpile and then just have too much on hand and not able to sell it in the time frame you thought you were going to be able to. These are all tools to help the cash flow increase. So if you're asking, where is all my money going? Schedule a time, right? We could probably see it in all of these different tools, but we just have to go kind of dive in and see what we can find. Now, when it comes to these things, they all kind of weave together, meaning profit, cash flow, budgeting, they all impact each other. And if we're doing 1 or 2 or 3 of these, we're probably going to be helping the overall health of our business. But if I were to ask you, what are the top 3? What do you think those are? The top 3 health indicators of a business. We'll see if you got them. Okay, positive cash flow, healthy profit margins, low debt to equity ratio. These are all things. Of course, there are others that really define a healthy business. Yet I wanted to give you just 3 because sometimes when we get so many, it becomes so overwhelming that we don't know where to focus our time on. Now, we talked about cash flow already, so that one's key. And your profit margins come based off of your cash flow and your budget and your expenses, right? And how much debt do I have? That debt to equity ratio is really key if you're looking at investors, getting financing, a loan. If this is too risky, you may lose an opportunity and you may not even know it. So let's dive in and see what it is for you and see what below average, average, and best in class looks like. And wouldn't it be amazing that you have so much then that money's growing on trees for you, right? So cash flow indicator, this is the amount of cash the business should have on hand, right? This is going to help you over the long haul for any high points and, the high peaks and the off peak times of the year to make sure you're able to have that zen throughout the year, no matter what's happening. So on hand, below average is less than 3 months on hand. Now, we've seen in economic downturns, the companies that do not have money on hand, the cash flow on hand to be able to sustain this, it becomes really a bumpy ride. The other time that everybody feels this is when taxes are due. And if you made a good amount of money last year and this year you're having a little tough time and you didn't save money away for the taxes, it could really impact your cash flow and it could put a big strain and the zen is out the door and you're like, oh my God, I don't know what to do. So think about how you can plan ahead for your business so you have potentially more than 3 months on hand. If you have 3 to 6 months, that's about average. If you have enough cushion that allows you some flexibility to be able to do what you want in your business, but also be able to take any crisis if it occurs. And there are other tools in here to help your cash flow so you're not paying out of pocket for things if something were to happen. That's risk management, right? Where am I planning for risk management that would help absorb the cost, or you're actually outsourcing your cost to somebody else if something were to happen. Best in class, 6 months or more. I'll say have a year on hand. And there are some tools out there. If you have money sitting in the bank and it's not earning money, that's painful. What if you had a way to earn money on your business money in a high yield savings account or a tool like it that you could access very quickly if you need it, but it's going to grow in the meantime? Pretty cool. If you are going to take up on this offer, reach out to me. I can show you how you can do it. But 6 months or more shows financial strength. Not only do, the banks like it, investors like it, a buyer will like it. This shows that you are, one, able to make good money, you're able to manage the money, and you're able to weather any storms, which they may come, and hopefully they don't. So when you're looking at this, where do you fall right now? Again, no judgment. Are you below average, average, or best in class? And if you can get to best in class, and you can, what do you need to do to get there, right? If you need to just move up a tier, what is it going to take to get you there? How much money do you need to put aside every month that you can to be able to reach that? All right, so my question to you is, how confident are you in your current cash flow? And what steps are you taking to ensure positive cash flow, both in the peak and off-peak periods? And we talked about this a little bit, but I really want you to kind of take this in. If I'm not confident, then what can I do to be confident? What is it going to take? And how much every month can I put away to be able to get to that place? Okay, let's go to the next one. And hopefully you like this fun picture, all about the profit margin. How do I really stockpile, make more so I can do more and play, right? If my profit margin is increasing, then I'm being able to make more. Obviously, that comes with taxes. So maybe we should talk about a tax strategy as well. Now, when you're looking at this indicator, I want you to keep in mind your industry, right? This is just a baseline average. It does not indicate, this is not to be for your specific industry. If you're in retail or manufacturing or one of those where the profit margins are really low, or you are a low cost leader and you are intentionally having a very low profit margin because you're looking for volume, then this may not be a good indicator for you and you'd want to work on an indicator that was good for your industry. But for our purposes here, we're going to walk through what's below average, which is less than 5% profit. This indicates that the business might be struggling to control cost, has a low pricing power, and could face intense competition, right? So less than 5% profit margin. The average is 5 to 10. So typical range indicates that you have a reasonable profit for your expenses and you have some room for growth, right? And best in class is greater than 10%. And it indicates a strong pricing power, good cost management, and you're able to operate in a high margin industry. All these things all kind of play in together. And as you look at this, where do you fall? Do you fall in that below average, average, or best in class? And then how do you get to the next level, right? What will it take to increase the profit? Would that be reducing expenses, raising revenue? Maybe it's adding a product. Maybe it's adding a service. So are your current profit margins aligned with your goals? Are you hitting the numbers that you have set for? And have you identified any areas where you can reduce the cost or make that adjustment on pricing? Right? Think about it. All right. And the last section is all about debt to equity. Now, debt to equity measures the financial leverage compared to your liabilities and your equity in the business. This is key for if you want to get a loan, if investors are looking to invest in you, the lower the number, the less risky you are, the higher the debt to equity ratio, the more risky you are. So when you're looking at this, it's all math. So it's looking at these different computations. I gave you them, but kind of in a reverse order, because to get to debt to equity, you need to know your total liabilities. And to know your total liabilities, you also need to know your shareholders' equity to be able to run this. So shareholders' equity is your total assets, everything you own, minus your liabilities. And if you're not sure what your liabilities are, they're all your short-term liabilities, all the things that are outstanding, things you need to pay, all those different aspects of the business, and your long-term debt, any type of loans you've taken, things that are on the books that you have. And then what you're going to do is do the math. You're just going to take that total liabilities divided by this total assets minus total liabilities, and you're going to get this debt to equity ratio. And from here, you're going to be able to see, well, where do I fall? Am I below average, average, or best in class? And remember, the smaller the number, the better. And don't get too worried if you have a loan out and maybe cash flow isn't as much, and maybe you don't own as much and you have a little bit more liabilities. Then it's, well, how do I reduce my liabilities so I can increase my assets? And that's cash on hand would be in that. If you have anything in different money markets or different things, that might be cash equivalents. And is a whole computation around that. You can find a time with me personally to walk through these different things. But when you break it down, what we want to get is below average is 1.5. So anything above that, greater than 1.5. So greater than 1.5. I think I said below, but greater than 1.5. This indicates that the debt is it's a bit risky, right? If somebody were to look at your company, they may say, looks like it's risky. I'm going to think about it. If your average might be sitting anywhere from 0.5 to 1.5, suggesting healthy balance between debt and equity. The company might be using debt for growth, but in a manageable way, and you without being over leveraged or taking on excessive financial risk. The best in class would be at 0.5 or lower, and indicating you have less debt on the books. However, it could also indicate you're not taking advantage of some potential growth opportunities, which you could be. And of course, this is planning and strategizing ahead. You could look at your fears based on that. And that's what I'm going to ask you next. So if you look at your debt to equity ratio, do you feel your level of financial leverage is optimal for growth? Or are there risks or fears associated with either having too much debt or too little? So think about that. Okay. So what can you do today to increase your business then? As you think about your business, you think about these areas that we talked about today, the budget, the cash flow, and the health indicators. What can you do today that will help move your business forward and also bring some zen into your world? And just as a few reminders, we talked about budgeting with purpose. We talked about cash flow efficiency, financial fitness, right? The health indicators of my company that share how healthy am I? Remember the below average, average, and best in class. And am I missing out on any opportunities that might be available? So I want to ask you, what did you find valuable? What could you use today that could help move your business forward? And of course, as we wrap up, I want to just share the tools that we have, accessing the solutions for your business. Please feel free to schedule a time with me one-on-one. We can talk about your situation, talk about what you're going through. Obviously, if you're looking for a specialist and looking for an introduction, please reach out to me and also attend our upcoming roundtable. And I look forward to seeing you there. And until then, keep raising the bar.